Today was a bloody one. I know this isn't something we're used to in 2025, but when it happens, you have to sit tall because the drops are usually a lot more violent than the pops. Today, we're going to cover what's causing this, what to look at, and some market history that you'll want to have on your side for tomorrow. This week will be exciting.
The stocks that mattered were the stocks that fell today. We can see in the S&P 500 heat map here that a lot of the larger tech stocks that we've been watching run to the upside recently, more specifically Nvidia and Apple, were both in the red today. Nvidia fell down 2.82%, while Apple fell down a more modest 0.64%. Amazon, Netflix, Oracle, Microsoft, Meta, Tesla, even Visa and MasterCard, all were down into the red today, Mike, and we can see that that had huge implications on the S&P 500. Now, everybody's like, okay, Tom, what happened today with the Powell speech? What caused this to happen? And, you know, the man, the myth, the legend came out and said stocks were fairly highly valued. So Jerome Powell's out here literally saying that the stock market is burning hotter than it should, and stocks are a little bit overpriced in the short term. And also, a lot of people, and specifically Bloomberg, are attributing the overall tech shares dropping to Jerome Powell giving no indication of rate cuts at the next FOMC meeting. There was essentially no mention of this, and it seems like Powell's kind of skirting the overall topic here. You know, he's kind of running away from the questions, and I don't blame him, right? He doesn't want to sound too crazy, like they're going to be going too aggressive at these cuts, but nonetheless, looking at the FedWatch tool, the market is pricing in a 91.9% chance of cuts at the next meeting still, so that's pretty solid.
You gotta love that wording today. Stock prices appear fairly highly valued, and clearly traders didn't like that tone. But, you know, diving into this a little bit deeper, basically, when we look at the market right now, we have been in a complete bull frenzy. We've made new all-time highs so many times this year, and basically, Powell's basically keeping his options open, saying, like, you know, we're not just going to cut rates endlessly to keep this bull frenzy getting out of control, but at the same time, he's not looking to get, like, too, like, restrictive either. So I think the big takeaway from today is that investors got a little bit disappointed with Powell's tone, and also it's worth keeping in mind that, you know, the market has risen so much over the past year already, where you know, it's inevitable to see some profit taking, but as we'll cover in just a few minutes, there's also a handful of other key things at play as well.
Yeah, there's some fun statistics that we're going to be talking about in today's video, but looking at the way the SPY dropped a little bit more today, you know, it was down 0.54%, and looking at the heat map, one of the biggest factors was Amazon and Nvidia. Those two stocks in the S&P were down over 2%, Amazon down over 3%, with Nvidia pretty much pushing that. You know, Nvidia's had a lot of good news lately. Yesterday, they had a crazy green candle and helped the market rise. One thing that I watched today, and very carefully, Mike, was if Nvidia could really get that breakout going through that all-time high, and unfortunately they rejected at crucial resistance at 184 to 185 again. So I'll be watching that area very carefully the next couple trading days. If Nvidia can push through 185, some optimism might be able to come back into the market a little bit as they push higher. But Mike, you know, I know that we mentioned that this is a crazy time of the year. You know, the S&P 500 has been all over the place. As I look at the SPY right now, of course it's in a pretty crazy position. It dropped down quite a bit today, but it did kind of straddle support that I've been watching in the short term, close to 662 to 662.50. So for tomorrow, that's going to be a very critical level to break back below. If we go back here, 662.50 used to be the old all-time high. So I think it was very fitting for the SPY to end up bouncing off of this today. If that does break, I will be watching for the 660 to 661 support zone to come back into play. But as the SPY tries to rise tomorrow, watching the previous all-time high around 665 will be critical. Today, whenever the SPY fell, whenever it finally got through this 665 support zone, that's whenever the price action really picked up whenever Jerome Powell was speaking.
Definitely. And I'll say heading into tomorrow, that 662.50 to 662 level is definitely going to be like the most important level on watch. As you pointed out, it is a previous all-time high, and it was the key support for today. So if that gives out, that definitely would be a concerning sign. So we shall see. But another thing that I think is almost certainly worth looking at right now is what the VIX is telling us. So we are in a situation where the volatility index is increasing while the S&P 500 has been doing the same. And historically speaking, the market did not like this one bit. As we can see from this data here, when the VIX rises with the market and the market's at an all-time high, what happens next is normally very bearish. If we look just 1 week later, we can see it's positive around 50% of the time. The average return is basically nothing, which by itself tells us this is a bearish stat because the market rises a lot more than it falls. But I would say specifically when we look at like that 2 to 3 weeks later mark, especially 3 weeks later, things just get nasty. The market's positive only 8% of the time, and Tom, those drops are pretty decently sized too.
They definitely are. Whether you go back and you look at the October 2024 reading or you even go all the way back to 1990, right? There's been a lot of red scenarios within this overall data set, especially at 3 weeks later being positive only 8% of the time. That has to be one of the more negative stats that we've looked at here on the channel. And it is pretty rare to see VIX move up this largely while the SPY is moving up to all-time highs as well. So it's not like we have a ton of readings with this, but again, I would say quite a few scenarios here. So be careful, especially over the next 3 weeks. I guess, for the next week, things are kind of 50-50, but my gosh, Mike, once we get out to 3 weeks later, only being green 8% of the time, that is a very scary statistic to say. And this is also coming as we're just in a negative time of the year in general. September is a very negative time of the year. And of course, we've been talking about this a lot as well, that, Rosh Hashanah to Yom Kippur is generally a very, very negative 9-day period of the year and even beats all other 9-day periods between September and mid-October.
Exactly, and that officially started yesterday, and it ends on Wednesday next week. So, not only do we have this negative VIX, stat reading, you could say, we also have some, very bearish data that goes all the way back to 1896. But then, as you just mentioned just a minute ago, September itself is normally really bad, especially the last week of September. So it's just like wherever you look, Tom, the historical data is pointing one direction.
It really is, and that is straight to the downside, and it's something to keep in mind for the next few days. I know that the overall market has been continually putting pressure to the upside. We've been making new all-time highs, even though the September seasonality comes out as pretty bearish. So, so far this September, we've been kind of switching things around from historical data points, but again, just keep this in mind and be ready. We always like to tell everybody about the possible scenarios so that you're ready and you don't get caught off guard, right? So keep risk in check. But Mike, I will say, as far as like events this week, the big thing was Jerome Powell speaking here, and he did move the market. We got a drop out of the SPY, but for tomorrow, I don't see too much on the radar. We can see here there's some data points coming out Thursday with durable goods, GDP, and existing home sales. Friday as well with the core PCE, personal income, and personal spending data. And of course, with earnings, tonight we have MU reporting in after hours. Tomorrow, KBH will report, and then Thursday, Costco's reporting as well. I really can't wait for Costco's report, of course, because I think it'll show how consumers are spending a little bit better in the short term and could give us an idea on inflation as well.
Definitely. And Tom, honestly, I wouldn't have the lineup any other way. I know there's been a lot that's been happening over the past few weeks, especially with Powell and rate cuts. But looking at this week, we're pretty much clear with the exception of PCE data on Friday, which I think is going to make for some really good trading opportunities. I know today was definitely bearish, but, it's easy for anyone to make money when stocks just go up every single day. But, people really get tested when the market inevitably starts to drop. And this isn't something to fear, but rather, just prepare yourself for, because, the market's never just going to go straight up. And oftentimes when we do see drops, not only do they present great bearish short-term opportunities, but they also open up longer-term buy the dip style opportunities as well. So it's an exciting time to be a trader. If you're new to the channel, definitely consider subscribing so you can get our videos recommended to you more often. It takes us hours every single day to make these videos, and we cover everything you need to know. But besides that, Tom, let's get right into the fun stuff, which are some setups and predictions. And a stock that is definitely on my radar is HAL. This stock did pretty well today, and it is in the energy industry. Looking at this stock today, basically the escalating tensions between NATO and Russia are contributing to a rally in oil and gas prices. And this company, Halliburton, is a significant player in the oil field services sector, which is very closely tied to fluctuations in the oil and gas market. It popped up by over 7% today, which is great to see. And it's definitely on my bullish radar going into tomorrow and even next week. I really like all this buying pressure we saw. And let's say in the worst case scenario where maybe we do see some selling pressure come in, maybe if the stock breaks below that like $23.40 area, then the setup can just get stopped out. But in the event this buying pressure keeps building on itself and oil prices keep rising, I really wouldn't be surprised to see this stock get closer to that 27 to 27.50 mark over like the next few weeks.
Yeah, that would actually make for a really good risk reward here, so I will keep it on the radar. I know that oil and gas has been pretty insane in the short term, and something cool about Halliburton as well is that it has a weak correlation to SPY. So if we do end up seeing some, let's say, end of September seasonality start playing out, it definitely is good to not have something overly correlated there. With my first setup, I'm looking at Archer Aviation to the upside. Yes, Archer moved higher again today, up 4.71%. We can see that recently Archer has been dipping to the downside quite drastically, but in the last couple of weeks, it has been starting to bounce off of this $8 to $8.50 support zone. I am happy with the way that it moved today, and I am watching for a possible continuation coming in tomorrow. Now today, it did start to reject around $10 at the end of the day, so I'm watching for that little peak right there at the end. If it can break out above $10.10 or $10.11 essentially, I'll be watching for that high of day from today at 10:30 to come into play, if not even a larger push than that. I thought it was a pretty good sign though to see ACHR hold up pretty well, and at the end of the day it did try to make a recovery back to the upside after that midday drop, but nonetheless it closed up 4.7% on a pretty bearish day.
There we go. Another ticker that's close on watch is APP, and it is to the downside. This setup is somewhat similar to the open setup that I mentioned in yesterday's video to the downside, where among many things, you have a stock that is overextended and starting to show some signs of weakness. APP is definitely on my bearish radar, where the more it falls, the better the setup will become. But more specifically, I would like this stock to stay below that 665 area, and in an extreme case, that 670 resistance, which is also the all-time high. Assuming it stays below these 2 points, I think it offers a great risk-reward playing it to the downside. The stock's overextended. It has strong, volatile moves. We're also seeing some general weakening in the market as a whole. And if this stock does drop, I wouldn't be surprised to see it break below that $600 support over the next few trading days and over, like, you could say in the longest sense, maybe like the next 2 weeks or so.
Yeah, that's going to be a big level coming up here, $600. AppLovin has been on fire this year. We can see that, especially off of the April lows, AppLovin has been very, very explosive. If we actually go from the low from April to the all-time high here, it was up 232% on this recovery. There's not a lot of stocks that can say that throughout this year, although it has been a very nice 2025, I must say. But Mike, with my next setup, I'm looking at Coinbase to the downside. I noticed that Coinbase and Bitcoin and crypto in general were falling off quite a bit today. If we go and we look at Bitcoin, it's down to around $111,600. And if we go to the daily chart, we can see that the recent peak was higher around $118,000. the turnover is starting to accelerate a bit, and I am going to be watching for Coinbase to continue selling over as well. We can see Coinbase tried to pop up recently, but I am going to be watching for this next support to come into play around $300 over the next couple weeks. But more specifically for tomorrow, I'll be waiting for 318 to break. We can see that there was a massive buy wall there on the X-Ray Vision and the Bookmap. There was around 33,000 shares there. So at the end of the day today, this did actually fill, and we started to see this break down a little bit more, and then even more buyers started to come in there. So I'll be watching for 318 to break down. If this breaks down tomorrow morning, I think there could be a larger flush and sell-off coming into play.
Sounds good. All right, well, with that being said, let's jump right into today's momentum plays. And with the first one, we have Energy Fuels, ticker symbol UUUU to the upside.
The uranium/nuclear stocks are back in the headlines, Mike, up over 7% again. If Energy Fuels can break out above $17 even, then watch them up.
With the next one, we have Rigetti Computing, ticker symbol RGTI, also to the upside.
Rigetti, nice move at the end of the day, up 10.89%. If they can break 32.50 just above that high of day, then watch for them to move up as well.
And then with the last one, we have Enphase, but to the downside.
Enphase had a pretty rough drop-off today, Mike, down 7% here. If they break under 37.30, right around the low of the day, then watch them to the downside.
That price action was disgusting with this one. Look at that. Down almost 8%, and it fell basically all day long. So yeah, definitely rough day there. These three stocks are volatile. Keep them on the radar for potential continuations. But as always, prioritize protecting yourself above everything else. Trade smart. Focus on making smart, long-term oriented trading decisions. If you struggle with this, you can learn for free in the Key Lessons channel in the StockedUp Discord. And besides that, we're jumping right into today's $562,000 big money trade. And we are looking at ticker symbol JETS, Jets. And this is basically an ETF that follows the global airline industry. And someone's betting against us pretty hard right now. More specifically, the trader here bought the 25 strike put options that expire on December 19th of 2025. For my advanced traders out there, this is technically a put debit spread where they also shorted the 22 strike puts. Basically, the trader here is risking around $560,000 to make around $1.68 million. Jets definitely sold off a little bit today, but nothing too crazy. We saw a big pop with energy prices, which definitely does negatively impact the global airline industry. As well as that, stocks are pretty aggressively valued right now, and we are just seeing some general selling pressure. I think it's a very interesting setup for all those who are willing to give it the time it needs.
Stocks are so aggressively valued that we have the man, the myth, the legend out here saying that stocks are fairly highly valued here. So it's definitely a thing that the market is getting overextended. And, you know, I do feel like that we're starting to see a lot of pressure on the economy, right? Jerome Powell's out here talking about a weakening labor market. That's a pretty rough thing to see. I am worried that maybe jets, maybe some other airlines start to continue to fall to the downside. Of course, if we look at individual airlines like Delta, American, they all seem like they're starting to turn over a bit in the short term, which is in turn helping push the Jets ETF to the downside as well. But I will be watching Jets closely. I did notice that in the short term, Mike, it did actually post a bit of a double bottom close to this like 25 to 25.20 support. So if we could like pull back under $25, that would be a really good indication to the downside for me if we could end up breaking back under there. But either way, I like that they did a put debit spread to keep their risk tight, and also the strikes that they used were pretty advantageous as well, being 25 and 22. I feel like if we start to break under 25, 22 is exactly where we're going to be heading.
There we go. So let's keep a close eye on this one going forward. And Tom, we have to give a giant shout out to today's member of the day, AC Philly in the StockedUp Discord, who crossed above over $100,000 in profits for the year. Huge shout out to you, AC Philly. huge congratulations and keep up the great work going forward. Thank you so much for all of the kind words as well. This is great to see, and I really don't have many words for this. Huge shout out to you. This is great to see. If you guys are into short-term trading, definitely check out that first link in the description in the comments down below to get in on the action. Basically, the StockedUp trading floor has everything you could need, whether it's our army of trading robots, weekly live events, daily big money trades, and so many other resources where if we explained everything, this video would be a couple hours long at least. You can save quite a bit with coupon code BIGMONEY, as you can see in the description and the comments down below. So definitely check that out. And huge shout out to you, AC Philly. Don't forget, for tomorrow, pay close attention to the VIX. It's one of the most useful indicators to look at because it reflects how smart money is positioning themselves. So keep that close on watch. And besides that, thank you all so much for watching. And let's crush it in the market tomorrow.